afternoon. Can all of you guys see me just fine? Okay, give me a second. Let me get the chat and everything up and running here. Okay, one moment. Okay. All right, so I think we are live here. However, the chat now coming online. There we go. There we go. Now we got it all fixed. Good, 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 good. Sorry about the delay on that, guys. So welcome to the live webinar. And if you guys cannot see this, I hope you guys can all, refresh and then come onto it. We should be live here and live on YouTube. Good to see all of you guys. Sorry for the bit delay here to get the thing going. All right, all right. So today is a very, very special day. Okay? And on special days, there's always technical problems. That's fine. It's normal because the webinar is going to be that impressive. All right. So for those of you guys who are new here, how many of you guys here are new? Okay? Can you just type in the word new in the box so I know how many of you guys here are new? Okay? I see a lot of familiar names in here. Welcome, guys. Welcome. You guys are saying the volume is a bit low. Okay, is that for, okay, let me see if I can bump it up a little bit more. Okay. Okay, some of you guys are saying old. Okay. All right, the audio should be fine now. I've raised up the volume a bit more. So hopefully that should be good now. So welcome, guys. Welcome. All right, excellent, excellent, excellent. So let's get started. We got 216 people in here and counting. Once the webinar goes beyond 1,000, there's going to be some complications for people to get in. And I hope, those of you guys who are already in, great. Thank you for being here on time. Sorry for the complication to get started. Before we get started, how many of you guys here are already Urban Forex students? Okay, how many of you guys here are already Urban Forex students? Let's get that out of the way. Let's see how many of you guys here are returning students coming to these webinars. So on behalf of me and my entire team, I want to wish all of you guys a happy 10-year anniversary. Okay, this month marks our 10 years of Urban Forex being around. Now, many companies, by the time they reach a couple of years, they go bust, they go bankrupt because of poor service, poor quality, and poor educational techniques. Yet, we are only getting bigger and better thanks to all of you guys. So we are now marking down in history a Forex firm lasting 10 years long. So it is a moment to celebrate for all of us, including you guys. Okay, so welcome, guys. Welcome, welcome, welcome. All right, so today is a very, very strong topic here. Many of the students asked me about trend pullbacks, right? They're like, well, what is trend trading? Okay, so they're asking about trend trading. They're asking me what indicator should I use for trend trading. Then they reached out saying, hey, since you guys are the best education on the planet for teaching Forex materials, let me ask these questions to you guys and see if you can help me out. So here we are with another iconic webinar to explain to you everything from A to Z about trend trading. So without further ado, let's get started. 60 minutes on the clock. Let's get started right now. Let's get started right now. Here we go. Okay, let me get rid of my face here. I'm gonna move it down a little bit. Okay, here we go. We got a little tiny Naveen now on the side. All right, let me know when you guys can see my circle. Let me know when you guys can see my circle. Okay. All right, looks like we're all good. Okay, let's get started. Now, trend trading is one of the most popular topics when it comes to the Forex industry. However, here's the funny part. Did you know 99% of the people on the internet have no clue about trend trading? Zero, zilch, nada. They're just rehashing, repeating all that garbage over and over again. Okay? Sorry for using the word garbage, but you know what I'm saying, right? They're just repeating that nonsense over and over again. Okay? Let me explain it to you from bottom all the way up. Okay? So a couple things. Okay? Why trend trading? Let's get into that first. Okay? Why trend trading? First of all, because it's extremely profitable from many, many edges that you can choose to do, whether you're trading ranges, whether you're trading channels. Trend trading happens to be one of the most profitable ways to trade. Some of the turtle traders in the past have done it. A lot of people till today are making their living off of it. There's seven-figure traders who are doing just trend trading as well. And it's one of the easiest ways to get into trading. Okay? One of the easiest ways to get into trading. So let's get into it a little bit deeper. Okay, let's get into it a little bit deeper. So trend trading, right? Okay, here we go. Here we go. All right. So you guys can see the circle, the holy circle of Urban Forex. Okay. So why trend trading? So we know it's extremely profitable. Okay, but what is trend trading? Now I want to ask all of you guys one question. When you guys trade, okay, and if you hit the buy button on your chart, do you make money if the chart goes up, or do you make money if the chart goes down? I know it's a very simple question, but sometimes you gotta bring people down to the basics and re-explain it because they think they know the basics. Unfortunately, that's not the case here, hence all the emails we're getting. Let's revisit this. If you hit the buy, you make money only if the chart goes up. Here's the thing. I want you to pay attention very carefully. Take notes if you have to. Turn off that cell phone, put the dog in the other room, tell the wife, the husband to like, zzz. We need to focus. Because I'm going to go deep. This is our 10-year anniversary webinar, and we're going to go all out. Discussing these things. Okay? All right, here we go. All right. So, when the market goes sideways, we call it an equilibrium. Okay? When the market goes sideways, we call it an equilibrium. There is satisfaction in the market. The sellers are getting what they want. The buyers are getting what they want. So whoever buys, okay, let me move my microphone closer to my mouth. Okay, that should be better. Okay, so there is satisfaction in this area. If the seller says, I want to sell for $100, and the buyers are like, I want to buy for $90, there is satisfaction going up and down, up and down, up and down. Okay? Now, what happens once the price goes down? It drops. What do you think that means? Before I even teach you how to trend trade, I want you to get the basics down perfectly. Don't guess. Don't just take an answer and accept it. I want you to think about it. What happens? Why did that price just collapse? Okay, why did the price just collapse? Think about it. Okay? There's way too many sell orders compared to the buy orders. People who were willing to buy at 90 stopped buying. Or people who were selling at 100 just became a lot more people. So the sellers overruled the buyers. Okay? The sellers overruled the buyers. So now imagine you as Mr. Joe or Mrs. Joe, right? As the average individual, when you see this, you're thinking, oh man, I wish I sold that. I could have made a ton of money. If I sold that from here to here, I would have had so much money. I would have bought myself a Ferrari, my grandma a Ferrari. I would have bought my dog a Ferrari just so he can go to the vet and be pissed off at me. Okay, but we get that, right? Let me take you one step back. Who runs the markets? Do you and I run the markets? Or do larger players operate the markets? Okay? Now, if you guys are saying, okay, I understand the concept. Yeah, the big boys run the money. Maybe Goldman Sachs runs the money. All of these things might come into your head, but there's someone out there who hit the sells very, very hard. And since there was no buyers, the price collapsed. So, if you and I are the big boys, for example, so there's Naveen, okay? I'm just calling myself a big boy, please. I'm not a big boy, but I'm just calling myself for this example. Okay, so there's Naveen. I'm gonna give him his Fancy hairstyle. Yeah, there you go. All right, Naveen, nice gelled up. Okay. And then there's Lisa. Okay. Okay, there's Lisa. She is the next billionaire tycoon as well. Sorry, it looks like she's in a wedding dress, but that's her hair, okay? And then there is Billy. Okay? All of us are big boys. Okay? Billy has spiky hair. Okay? He's rad like that. All of us are big boys, and we're saying we want to sell at this $100 price, and we hit the sales too hard. Because we hit the sales too hard, prices collapsed. All of you guys in the chat box answer this one question. Is that good for business or is that bad for business for us big boys? Is that good for business or is that bad for business? Okay? Agent Billy, you're saying, oh, and Bob. You can't forget Bob. All right? Okay, so a lot of you guys are saying that's bad for business. There you go. That's bad for business. So think about it very carefully. How can your objectives of I need to sell so I can make the money not align with the larger player that's saying if that happens, I'm actually losing money? You see that? Split in the mind. Split in the mind. How many of you guys just had an aha moment? We haven't even gone deeper into trend trading. And I'm trying to explain to you the absolute basics, where many people brush it off because who wants the easy basic stuff? It's supposed to be common sense and we just accept or assume we know what it is. Okay? Okay? Understood? So far so good? Everyone with me? So when the prices drop drastically down or they rise drastically up, it is not good for business for the larger players. It is bad for business for the larger players. Okay, now, next step. Okay, next step. Once you know it is bad for business for them, what do you think they're going to do? They're gonna stop the selling, saying, whoa, 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 whoa. Okay, Naveen, Sally, Billy, stop the selling. We can't sell down here at $60. Are you crazy? That's bad for business. Let's stop the selling completely. Let the buyers come in more. Because if we don't have buyers, who are we selling to? Who are we selling to? We're just wasting money. Let the buyers come in. So what we're doing now is we're allowing the buyers to come up. Okay? So the buyers start coming in slowly. Now, around the world, all of you guys, simple question. Around the world, what are people, when they look at this chart, what do they see? Do they see a downtrend or do they see an uptrend? Just think about it for a moment. Take a step back. You and your dog can look at this together and be like, do you see a downward movement or an upward movement? Okay, some of you guys are saying downward movement. Excellent. So, since it's a downward movement, are people actually buying yet? No. If people are not buying yet, who can we sell to? Who can we sell to? Okay? I'm not talking strategy yet. Just use logic. Okay? Just use logic. We can't sell to anyone even though there is a nice support and resistance, even though Mr. Fibonacci himself comes down and says, this, my friend, is 50% retracement. You must sell. I don't care what the logic says. No, no. You can't just force anything out of the market. You need to understand how it works. Okay? So far, so good? I hope I'm not like getting on your nerves by screaming and talking really loud. Okay, I'm just trying to get the point across, and I'm trying to do it as calmly as possible. Okay? So they're still looking at it as a sell. So as the sells start going down, everyone is saying, oh yeah, you see, I told you it's a sell. Because my SNR, because my bat pattern, because my cat pattern, because my bob pattern, whatever pattern they might believe in, they might say, you see, it's a downtrend. So in a downtrend, we must sell. So Bob, Lisa, Naveen, Billy, and Sally, we stopped the selling long time ago. Now, random people is selling. Random people are selling. Who are they selling to? No one's buying it. Everyone's looking at it as a sell. Remember, including your dog. Your dog sees this as a downtrend. And then suddenly, prices jump up very aggressively. And all those sellers are like, oh my god, my stop loss. I just got hit. I'm gonna have to sell my Ferrari. My dog will no longer go to the vet in his red Ferrari. My dog will unfortunately have to take the bus. Okay? It's a sad day for the dog. It's a sad day for the dog. Okay? No dog deserves that. Right? So at this point, all stop loss are triggered because the knowledge of stop losses are the same as well. It's rehashed. Where do you put your stop losses? Above the recent high. Okay? Above the recent high. So now that the stop losses are triggered, this area that was very strongly implemented in people's brain as that's my SNR, that's my Fibonacci, that's my everything, suddenly that gets taken out and the buys go up very aggressively. Now, what do you think the public is thinking? What do you think the public is thinking now? Yeah, it's no longer selling, it's actually buying. The markets are actually going up. Then they become the buyers. They start becoming the buyers now. As the public starts becoming the buyers, they're not buying down here, obviously. They're not buying over here, obviously. People only buy once they see the after effect. Once everybody is buying, then they want to buy also. Sort of like a Bitcoin mania, right? Oh, now I want to buy it. I can see it's clearly an uptrend. Okay? That's when the buying begins. Once the buying begins here, suddenly on the radar of Naveen, Billy, and Sally, they're like, oh, the buyers are coming back. Great. If the buyers are coming back, fantastic. Let's start to see if we can start selling to them around 90, around 95. I didn't want to sell it at 60, but I can take a $5 haircut. Why not? Why not? So I can start selling around these prices. Okay? I can start selling around these prices. And then the market starts to roll over and then it starts going down. Okay? And then it starts to roll over and it starts going down. Some of you guys are saying increase volume. I was saying the dog does not have a Ferrari anymore. Sorry, is that loud enough? Sorry about that. I don't know what's wrong on your end. The volume is pretty high. Unfortunately, we're gonna have to kick this guy out. 1 second. Let's take him out. Okay. Sorry about that. All right. Done. All right. So now the sells begin. Okay? The sells begin. Okay? As the sells begin again, all the people, the average individual who was looking at this saying it's a seller's market, they start thinking, oh, so it was a sell. You see, I told you. They're going to get up on YouTube. They're going to get onto the forums and type, you see, I was right. I knew it was a sell. I knew it. Did you make money from it? This is what we're here to talk about today. How do you make money from it? Even my dog can see it's a downtrend. That doesn't make the dog a millionaire. How do you make money from this? All of you guys agree? Shall we dig into that a little bit deeper? Okay. I think I'm gonna have to make the Urban Forex icon a dog now, because I've been saying the word dog so much. I think that's the new mascot. Okay. Okay, so Kevin, there's a very good question Kevin is asking. Did the big boys orchestrate the aggressive buy at 60? No, they did not. All the big boys did was they stopped the selling. They stopped the selling. Once they stop the selling, the buyers come up because the big boys are no longer giving that discounted price. If they're no longer giving that discounted price, then people will come. It's like, hey, no one's selling anymore. Can I buy at a higher price? Can I buy at a higher price? Can I buy at a higher price? And once they're buying at a higher price, the big boys are like, oh, people are willing to buy again. Let's sell. Let's sell. Okay? Does that make sense? How many of you guys are with me so far? Okay, I'm trying to explain this in the most simplest manner, in the most fun manner, obviously. But everything that we're talking about is actually a serious topic, but I'm trying to make it as easy as it can be for you to understand how the logic of the market works. How the logic of the market works. Yeah? So far, so good? Okay. Okay. So now let's become the trader. Let's become the trader. Now we are the guys who are saying, I hope I can get in on the sell side when the big boy is losing money. That's the only place where we make a profit. When you guys see 100 pip movements, you can be assured if you made that 100 pips, you are happy, but the big boy is pissed off. He is absolutely furious. Not because you made money, it's because he's losing money. How many of you guys understand that logic? And how many of you guys think the big boys are out there to get me? They're planning and orchestrating everything in a very evil way to make sure I will always stay in the 9 to 5. It seems like that. Unfortunately, it's just the market. It just looks like that. Okay? How many of you guys feel like I always get stopped out and then the trade works? How many of you guys here can actually say I always get stopped out and then the trade works? What is going on with me? It looks like God is targeting me. He's giving me bad luck. You might feel like you're the only person on the planet that's getting this. Some of you guys might even say, you want to be successful, just do the opposite of what I do because I always make a loss. How many of you guys feel like that? Right? This is normal human behavior and it's not you uniquely. This happens to everybody. This happens to everybody. Okay? Now, we've gone 30 minutes into the webinar talking about the big boy's perspective. Okay? And how our dog lost his Ferrari. Okay? Forget people and their Ferraris. These days, even dogs want Ferrari, right? So the dog lost his Ferrari. Shall we talk how the dog can get his Ferrari back? Let's do that. Let's do that. Let's find out how this animal can get his Ferrari back. All right, here we go. Now, we're going to go trader perspective. Okay, this is the perspective of the trader. The trader perspective only works with the knowledge of the big boy. If he does not know how the big boy is thinking, then the trader is simply testing his luck with technical analysis. I want you guys can quote me on this. If the trader does not know what the big boy is thinking, then the trader is simply testing his luck with technical analysis. Okay? I want you to take that deep within you and understand that. Okay? He's simply testing his luck with technical analysis, with crossing his fingers saying, I hope it works this time like it did last time. Okay? All right. So now from the trader's perspective. So the markets are in equilibrium. They are satisfied. To a trader, we call this the boring area. Okay? To a trader, he's not interested in this. He's like, it's going sideways. I can't make money on sideways because if it goes sideways, I'll make 10 pips. I can't brag about it to my friends saying, I made 100 pips. So it's boring. Once the boring phase is done, okay, the boring process is done, the market begins to panic because some news came out. Once a news comes out, the big boys are like, whoa, here we go. We got to sell this thing. But as the big boy sells it, and then Sally steps in, she sells it. Billy steps in, he sells it. Unfortunately, there's way too many sellers against the buyers. And prices collapse down. And as it's going down, all the big boys are freaking out, pulling out their hair, saying, oh my goodness, I don't want to sell at these low prices. Stop. Now, you as a trader, you're like, okay, I saw them bleed. I saw them bleed. What does it mean next? Will they wait for prices to come back up and then do the sells again? The number one question you're asking is, will he come back? Not where is my SNR, not where is my Fibonacci, not where does my dog think I should sell it. You're asking the question, will the big boy hit the sells again? Okay? So, for them to hit the sells, they need buyers. No buyers, they're not selling it. In the first initial move up, people will look at this as a sell. Do not sell that initial move up. No, do not sell that initial move up. You're walking into a trap. You are walking into a trap. As the prices roll over and they're going down, you rest be assured everybody is going to sell that. Everybody is going to sell that. You want to know when that everybody takes a hit. Once that everybody takes a hit, the buyers will step in. Once the buyers step in, you know the big boy is now getting interested, saying, oh, there's buyers. Thank you. Oh, good for business again. Good for business again. Once the buyers step in, we know that they want to sell again at this stage. So what we're looking for now is, how can we prepare to sell this? How can we prepare to sell this? So do you see that when people say, oh, the best time to trade is when you get a spike out? When you get a spike out and people get stopped out? Do you see when people say, I only trade once people get stopped out? Have you ever met a single individual that tells you why that happens? Because they have no idea. They're just doing technical analysis. Everyone's just doing technical analysis. Okay? There is a science to technical analysis, and the science is who is controlling the market. You need to understand that science. You can't just fiddle around with it and hoping to be the best. If you want to make money consistently, to raise your lot sizes, okay, you don't want to sit in micros your whole life. You don't want to sit in mini lots your whole life. You want to bump up your game. Because the objective as a trader is, who is the biggest dog in the house with the largest lot size, and who can do it again and again and again and again and again. Not who made 100 pips. Real traders don't give a crap about that. Okay? So far so good? Okay. Now, from the trader's perspective, you now understand how the big boy is thinking, so you are positioning yourself to say, I will not touch this area where it's obvious everyone wants to sell it. I will not touch that area. I will only get interested once prices go a bit higher. This is now what we call a trend pullback. This is now what we call a trend pullback. Okay? So this is the edge that many traders who are new, they make a killing from this style. And I want you to learn this method if you are new to trading especially. Okay? How many of you guys have been in trading for more than a year and have never looked at the charts in this way? More than a year and have never looked at the charts in this way. Okay? I want you to feel that. It's like, what, you know, the knowledge out there is so bad. It's so bad. You know, that's why we call it the 98 and 2%. Because the 98% is just teaching each other. You know, they're just teaching each other nonsense. Okay? All right. So, let's have a look at this now. Okay, there's a reason why we're the best in the industry. There's a reason why we win all the awards. There's a reason why we have the highest ratings on the planet when it comes to a Forex firm. And there's a reason why we've been here 10 years straight, standing strong, bigger, and fatter than ever. Okay? And we have the most successful traders on the planet as well. Okay? All right, now, pushing forward. Sorry, I'm a bit excited today because it's our 10-year anniversary. I hope you guys don't mind. Sorry, I'm generally, if you see my other webinars, I'm very calm and chill. But I want to give you guys something you can take home immediately today and activate it and really kick ass. Or kick butt. Sorry, I shouldn't say ass in public. Okay? So kick butt. I hope the recording mutes that. All right. All right, so now, the question next comes is, are there any indicators I can use to analyze, okay, indicator, to analyze how do I know my trend is active, okay? So those of you guys who are looking for an indicator to help you, you know, to visually guide you. I'm personally not an indicator fan. We'll get into that. But for those of you who like indicators for that extra, you know, peace of mind, one of the best indicators to work with trends are moving averages. So let me open up one of these charts. Let me clear this out completely so it's nice and clean. Okay. Let me know if you guys can see my charts. Okay. And I'm gonna change my mouse pointer. I'm gonna make my mouse pointer a little bit bigger. So for all the grandpas and grandpas who are in here, I don't know. There we go. There we go. Now everyone can see this. Okay. Everyone can see this. All right. All right. Okay. All good. All clear. Now one of these things, okay, that we're looking at that we can use for indicators is moving averages. So let's type in moving averages. Moving average. Come on. Let it load. I'll just type MA. Okay, MA is short for moving average. Now, I'm going to click on MA. I'm going to go to the settings of the MA, and I'm going to show you what this means. So I'm going to make it a little bit darker so you guys can all see it. Okay, let's make it darker. Oh yeah, that's the MA from hell. There we go. Let's make it purple. And inputs. This input, the length, basically means it takes the average movement of the last 9 candles. That's what it means. So if I say I want a 50 MA, I want to know in the last 50 candles, what's the flow of the market? Okay? A lot of people love to use MAs. For me, I look at it like, well, the MAs can tell me, or I can just open my eyes and look at 50 candles. Either way, you know, everyone has those ab machines to avoid going to the gym, right? And not do the workout. MAs are something similar to that. Okay? You can use it. Do you need it? No. It's just a quick hack. It's just a quick hack. Okay? Now, in these MAs, it tells you the trend is down. Okay? You can clearly see the markets are moving down, 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 down. So, here's the thing. The markets first start to move down here. They pull back, they move down more. They pull back. It's already making lower high, lower lows. Okay, a downtrend, you need 2 pieces. Okay, I'm gonna just write it really quickly. Downtrend needs a lower high and a lower low. Okay. Okay, and those of you guys who are thinking like, what about LV? No Louis Vuitton here. Just lower highs and lower lows. Okay, so this is a lower high. The highest point got lower, and then the lower low is this is the lowest point, and that got lower. That tells you a trend is in motion. Okay, a trend is in motion, which means what? Quick quiz, which means what? The big boy is losing money. He's bleeding. He's bleeding. So, what we need for this big boy to do, if he's selling and selling and selling, and we can see it from our indicator, the problem with the indicator is first the price moves. He's going downtrend. Then the indicator starts to follow it. And then those people who are watching the indicator, they're the last people to follow it. So you're 3 steps behind by using indicators. Okay, 3 steps behind. So if you really want to be good at trading, cut out the indicators, be more of a price action trader. Okay? Which means you're relying on how price moves instead of how the indicator moves. Does that make sense? So for this example, I'm going to cut the indicator. However, the indicators are the best. You can use 20, you can use 50, you can use 100, and you can put as many as you want to use it. Okay, so here's what we're going to do. I'm going to get rid of everything here. I'm going to get rid of the indicator, and I want you to think about this carefully. So the big boys are selling. Okay, they're selling, and then prices slip away out of their hands because they sold $1 billion each, big boy. They sold at $1 billion, and price is just slipping away, slipping away, slipping away. The further price gets, the more losses they're making. The further price gets, the more losses they're making. Okay, you want to sing a song about this? The further price gets, the more losses they're making. No, you need to remember this, because as the trend goes down, many people hit the sells, hit the sells, hit the sells. You need to stop doing that, because now none of you guys will ever do this going forward from this webinar, because I need you guys to promise me right here and right now that you will cut out that nonsense. Okay, when I see stuff like that, I'm gonna slap people's hands and be like, hey, very bad, Charlie or Susan, whoever it may be. Their hands will become red because I'm keep slapping it. Like, stop selling when it's a seller's market. Stop doing that. Okay? So, as the bleeding begins, it's going all the way down. What do you think everyone is trying to do as a trader? As a trader, they're saying, I also want to sell because I also need a Ferrari for my dog. Although the dreams are correct, every dog deserves a Ferrari, the logic is all wrong. The logic is all wrong. Agreed? Now, step 2. Once prices starts to pull back a little bit, because the sellers, they stop the bleeding here. There's no more lower lows coming in. It's starting to go sideways, which means it gives you the boring part. The stuff that is boring, the stuff people just quit on. That boring part is my best friend. I want you to love these boring parts. Marry them. Okay? Take them out to dinner. These are the best parts. Because once these boring parts kick in, you know that everyone wants to prepare to sell again. Why? Because they look at this as their pullbacks coming in, and with that comes, let's get it in here. Where is it in here? Oh, sorry, I think it's in here. No, where is it? I haven't used it in ages. Hold on, 1 second. Fibonacci retracement. There we go. Come on, let's take it from the top. Let's take it all the way down, Mr. Fibonacci. Here we go. And let's drag it across. And look at that beauty. Look at that beauty. Every Tom, Dick, and Harry on YouTube is going to say sell that, because numbers don't lie. Fibonacci is the way to go. It's a mathematical sequence. The world runs around Fibonacci. You must run around it too. Stop. Just stop. It's like, I don't know how to really tell you guys. You need to quit that nonsense. Quit that nonsense. Because it's the big boys trading and they were bleeding. They are not interested in hitting the sells again. They need buyers. They need buyers. So this first selling process that happens will not work. It is only when that sell fails and everyone's stop loss who is above the recent high, because Forex for Dummies taught me when the price moves, you just put your stop loss just above. You're good. You're good. You're good. It's so simple. Once they get stopped out, the exclamation comes out into the whole world, like, oh my god, what just happened? What? No way. No way. I thought I can never lose. No way. As prices come back higher and everyone gets a stop loss, buyers are now starting to come in. As the buyers are starting to come in, people are saying in the first move up, no one thought about buying it. No one thought about buying it. But as it gets higher, people are now convinced, oh my god, it must be a buy. It must be a buy. Because the sells are no longer working. A buy means an uptrend. An uptrend means higher high, higher low. Okay, so this highest point became higher, and this lowest point, okay, became higher as well. So that is the trend, right? So since the trend is going upwards, this must mean it's a buyer's market. So a lot of buys come in here. The higher it goes, more buys come. The higher it goes, even more buys come. And once there's a lot of buyers piling in, it is just a matter of time for us to evaluate this important question of, will the big boys who were bleeding, do they still have a lot of sell orders to say, I want to sell again? A simple concept like this, it is just battered in a really, really bad way across the internet. Really, really badly. People are just saying, oh, you get your SNR, all right, the moment it touches that, you sell. It touches your Fibonacci, you sell. Oh, Jesus Christ, I wonder how much money has been lost along the process. It costs people lots of money. It's very dangerous. You know why I'm so passionate about this? Because I was that guy losing a ton of money back in the day. I hated it. I hated it. And every webinar I attended, first of all, they're teaching me garbage, and they're telling me to sell at the wrong place and buy at the wrong place. I just felt frustrated. And the answer kept coming, there must be something wrong with you. Yeah, no shit. Because I can't figure it out. Why can't I figure it out? Because my focus was just on technical analysis. I never thought about the market, and I never asked the question why. I was always focused on this. And this is every trader's dream. How? How can I do this? How can I make money? How can I become a millionaire? How can I do this? How can I follow you? No, 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 no. Wrong question. Why is the right question. The moment you answer that why, everything will make sense. Okay? Then you go work on your how afterwards. This is where everyone begins. This is where everyone begins. They're looking for the how. Okay? Does that make sense? How many of you guys had an aha moment today and saying, finally, there's a brown guy on the internet with a little bit of beard screaming about some 10-year nonsense, talking about dogs, and I finally get it. And I finally get it. Okay? Okay, aha moments? Okay, good. I want you to walk away from these webinars just like you do from any other of our other webinars to really take home something you can use. We're not going to sit here and just talk about stories and stories and stories. We go straight to the point. Straight to the point. Quit wasting your time. You've wasted enough time in life already. This is why you're looking for a way out. This is why you're still attending webinars after webinars after webinars, because you're focused on the how. You need to quit that nonsense. You need to focus on the why. Then you work on your how. Agreed? All right. All right. Now, shall we talk about a simple strategy that you can use? A simple strategy that we can use. Okay? I'm going to teach you guys a little technique as if you're a complete beginner. Okay? A complete beginner. There's no background knowledge, and you're looking for, okay, Naveen, I understand what you've been talking about. You said something about a, BB or something like that, and I think that means big boy or big Billy. I get it. I understood the logic. How do I use it? Okay? How do I use it? What can I do today, immediately, to see an improvement in my trading? So let's discuss that. Let's discuss that. Couple of things. Once you see the bleeding happen, okay? A downtrend now is bleeding for you. Change your language. Don't say, oh, what a beautiful downtrend. No, no, no. You should be like, oh, man, look at how much money that big boy lost. Oh, feel sorry for him. Stop thinking he's against you. Just feel bad for the guy. Empathy gets you further than anger and jealousy. Be a good person. Feel bad for the guy who lost a ton of money there. And now you come in with the idea of, I'm going to let go the first piece that everyone might be selling. Once prices go above that, okay? Because the reason why I know prices are going to go above that is because I still cannot go beyond my boring zone. My boring area is still holding. Once I get outside the boring zone to the other side and everyone starts the buying, I want to see the movement slow down. Okay, the movement might start like this, and then it goes down, then it goes up again. And you're like, Then it goes down, then it goes up again. Then it goes down, and then it goes up again. Then it goes down, and then it goes up again. And then it goes down, and then it goes up again. And then it goes down, and then it goes up again. This voice of mine that you're hearing slowing down, imagine it as my tone. I can start off screaming really high like this over here, and then my voice slows down. That's what you're looking for. That's what you're looking for. You want it to calm the hell down. Okay? No one likes a squeaky voice on a webinar, right? You want this nice, smooth Marvin Gaye voice, right? Yeah, baby. That's the thing you want to sell with. That's the thing. When this happens, you know what's actually happening? It's not Marvin Gaye coming in, but you know what's actually happening? In this process, when the market rolls over slowly, the big boys are slowly adding their money again, because they don't want to make the same mistake as they did before by saying $1 billion sell. They're saying 100 million sell, 100 million sell, 100 million sell, because there's enough people willing to buy it. Don't scare the market. Do it quietly. Do it quietly. And once the buyers start to give up and they're like, it's not going up anymore, I quit, and the sellers kick in a little bit more, then the bleeding unfortunately continues again. The bleeding unfortunately continues again. This strategy is a simple strategy. I'm putting it in a nutshell to you. I have made my fortune with this strategy. I am giving this to you for free right now. I am going to be extremely angry if you don't make use of this. Because I'm telling you, we have made a killing using this technique. And I'm sharing this with you as our 10-year anniversary method. Something for you to take and be really good with this. Because you deserve, I'm sorry, your dog deserves to go to the vet in a Ferrari. No dog should have to take the bus. Okay? No dog should have to take the bus. All right. Okay? Take that in. Take that in. You know, you got to really understand this. Okay? You have suffered enough in the market. Quit with the nonsense. You are still going webinar to webinar. You're looking for the answer. I'm giving you something right here to use. Don't go to the next webinar. Use it. Learn it. Practice it. Develop it. Fail from it. Ask questions about it. And grow from it. Make the change today. Stop becoming a webinar junkie, going from one webinar to the next webinar to the next webinar, because all you're going to do is get information crammed down your brain that you cannot process. Okay? Now, as a 10-year anniversary, for those of you guys who are already students of ours, okay, which I probably think 70% of you guys here, because you guys keep coming back to hear me talk about dogs for some reason. As a 10-year anniversary, I am giving away 50% discount store-wide. If you have some educational pieces that you haven't learned yet, you can pick up those missing courses at a 50% discount. You can use, let me see where my hand is pointing to. You can use this guy down here. You can use Irby. And for those of you who are watching this on YouTube, you can just head on over to urbanforex.com and you will see on the store page we have a 50% discount. However, this is for 24 hours only. Okay? You guys took time off to be here. Let's respect that time both ways. I didn't waste your time in the webinar at all. And if you're here, you get the benefits of, you get that 50% off within 24 hours. For those of you who do not have any of our courses and you're looking for, well, where should I begin? The final and the best place, one of our most famous courses, is the Mastering Price Action course. This is a 7-week long course where I walk you through step by step on what you need to do to understand the why. I give you a course material for 1 week. You can watch it on demand at your convenience. There's some time where you can practice it. You can ask my team questions. They will assist you with that. And then the next week, the course will unlock. If you're busy, you're out at work or something, that's fine. You can watch it on demand at your own convenience. The course will not expire. Neither will the support. As long as you're with Urban Forex, your support will not expire. This is not a subscription. You're not going to pay for it monthly, but we are there for you every single day if you're a student with Urban Forex, because that's what we do. That's what we do. All right, so you guys can head on over to the store. You guys can use Irby on the bottom right hand of your screen to use that chat bot. He can assist you. You guys can email us, info@urbanforex.com. We can assist you there. My team is always available to assist you day or night, weekday or weekend. We are always around. We're always around. All right, guys. Once again, if you can, one last request. Celebrate today. It's a 10-year anniversary. I've given you some good stuff. This webinar is recorded. We're going to get you this webinar. Don't worry. Use it, prosper, and spread the joy. Because life is boring alone in a Ferrari with 2 seats. It needs to be you and at least the dog. All right? Have a good one, guys. Thanks for coming in. I'll see you guys in the next webinar. Cheers. Bye for now.